Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the best stocks to buy on the stock market right now that are trading at phenomenal discounts. So all of the companies and stocks that we're going to be addressing in this video are great bargains. So for more videos like this one, remember to go and smash that like button right now, comment your favorite stock to buy during this market correction, subscribe if you are new, and without further ado, let's just jump right into today's stories. So the first stock we're going to talk about is Sofi Technologies Inc., ticker symbol SOFI. And as you know, I report a lot on Sofi on this particular channel. But if you didn't know, Sofi Technologies is a personal finance company that specializes in online banking. They offer an all-in-one inclusive digital app for their customers, and it gives their customers access to many financial services and or products. Some of these would include the ability to refinance their student loans, take out a home loan, obtain a personal loan. They also offer brokerage services, wealth management services, as well as credit cards. Sofi's stock price currently trades for around $5.84. However, very bearish negative investors think that the company is worth somewhere around $7, which would make the current stock price undervalued even from a critical perspective. And then on the bullish positive end, we have a $22 price target from very excited bullish investors who want to buy and hold this company for the long term. Overall, Sofi Technologies' SOFI stock price has fallen around 66.39%. However, this has not impacted their underlying business because according to analysts, the company is extremely well diversified in their revenue channels and their business model is very durable, which is why many analysts actually have a buy rating for Sofi Technologies' SOFI stock, and they have around a $9 price target, which again would make this company very undervalued, which means we could buy this company at a phenomenal discount. In our number 9 spot, we have Epam Systems Inc., ticker symbol EPAM. If you didn't know, Epam is a software engineering company that specializes in software product development, and they also offer application maintenance as well as support. Year to date, this company's stock price has fallen around 54% to where the current stock price is trading for around $310 per share. While very bearish negative investors think that the company is worth at least $370, while the more bullish positive investors think that the stock price could surge up to $771 per share. This is why a Wedbush analyst actually raised his price target for Epam Systems from $380 all the way up to $400 per share, and he also gave this company an outperform rating, which is just another way to say that he gave this company a buy rating. So that's another company that you definitely want to keep on your radar and at minimum put on a watch list. Next up, we have Pinterest Inc., ticker symbol PINS. And for me personally, I actually disagree with this particular article, and I don't think this company is a buying opportunity right now. I think it's more of a hold. For those of you who don't know, Pinterest is a social media company where you can put up images, post GIFs, and upload videos. The stock price has lost around 50% of its value year to date to where the company's stock price trades at around $20 per share. Critics of this particular company think that the company is going to fall below $15 per share. However, the more optimistic investors think that the company could surge up to $89 per share over the next 12 months. A Citigroup analyst actually reported on this particular company, and he gave it a neutral rating with a $24 price target, which means according to analysts, the company is slightly undervalued. However, I personally think that the company could fall much more. But I just want to put this company on your radar just in case you want some exposure to more social media companies. Right now, actually, a good replacement for this company would be Meta Platforms, in my personal opinion, because that's another company that's not on this list. However, it's very discounted. The next company that we have is Lam Research Corporation, ticker symbol LRCX. If you didn't know, Lam Research is a company that distributes semiconductor manufacturing products such as transistors, capacitors, and wiring to semiconductor companies. Their stock price has fallen around 41.26% year to date, which to me indicates that this is a great buying opportunity for this particular company. Even the most bearish negative critics and investors of of this company think that the company is worth somewhere around $510 per share. The current stock price, to put this into perspective, is currently trading at only $388, and this means there is still great upside potential over the next 12 months for this particular company. Not to mention the very bullish positive investors think that the company could reach $840 for just a single share, and this is absolutely phenomenal. This is another reason why a Bank of America analyst has a buy rating for Lam Research, and why many analysts think that the company is worth around $540, which again would mean that the current stock price is trading below its actual fair value. Some of these companies I have talked about in previous videos, however, many of them are actually going to be new to you. Another company that I disagree with this particular Yahoo Finance article on is Micron Technology Inc., ticker symbol MU. Right now, the MU stock price trades for around $56.73, while very negative investors think that the company is worth around $50, which indicates that the stock price is going to continuously fall downward below $50. However, positive investors think that the company could reach over $158 per share, which is pretty phenomenal. If you are not familiar with Micron Technology, the company produces computer data storage devices, including DRAM, flash memory, and solid-state drives. Analysts have collectively said that this company is a buy right now by giving it an outperform rating, especially for long-term investors, and they also give it a stock price prediction of $90 over the next 12 months. So overall, these are all phenomenal companies to buy, but this is only one half of the list. And now we get to talk about the top 5 picks according to this Yahoo Finance article. And in our number 5 spot, we have Intuit Inc., ticker symbol INTU, and I am very bullish on this particular company. The current stock price trades for $400 per share, which is below the low-end price target according to investors of $450, and on the high end, the company could go as high as $652 within the next year. This company, if you didn't know, specializes in financial software. You might not know the name Intuit, but you probably know some of their products, such as TurboTax, QuickBooks, Mint, Credit Karma, and MailChimp. The current stock price for this particular company has dropped close to 39% year to date, and this is another reason why analysts have a buy rating for this company, because they believe it's undervalued right now compared to its fair value, and they have a price target of around $465 for this particular company, and like I said before, I personally am very bullish on this company. The next company we're going to talk about is in our number 4 spot, and that's Boston Omaha Corporation, ticker symbol BOC. BOC currently trades for $22 per share, and it's lost around 28.69% of its value year to date. This is another company that is technically undervalued from an investor standpoint, because even the negative investors say that the company is at least worth somewhere around $27 per share, while the positive investors think that the company is worth close to $39 per share. This company offers billboard advertising as well as brokerage services, broadband, and investing services in general. Wells Fargo actually has an analyst who gave this company an outperform rating and says that the company's stock price target is $27 per share. So they would actually agree with what investors think of this company, and you don't see that often where analysts and investors actually have the same price target for a particular company, and I would tend to believe them in this particular instance. But because price targets are not certain, always make sure to do your own research and take these numbers with a grain of salt. In our number 3 spot, we have Booking Holding Inc., ticker symbol BKNG. For one BKNG stock, it's worth $1,787 right now. However, if that's too much money for you, feel free to look into a brokerage that offers fractional shares or share slices. And this way, you don't have to buy an entire share worth $1,787 if you are interested in this particular company. This company is a travel technology firm that operates an online platform to accommodate people's food interests, their travel reservations, as well as other things that they would like to book online. Right now, the current stock price is down around 29% year to date, and critics of the company think that their BKNG stock should be worth around $1,890 per share. However, positive investors see great upside potential because they think the stock price could surge all the way up to $3,100. A JP Morgan analyst even chimed in on this debate, and he has a price target for this company of $2,435, which is somewhere in between what investors think of this company, and clearly this analyst gives them an overweight rating, also known as a buy rating. So now let's jump over into our number 2 spot, which is none other than PayPal Holdings, ticker symbol PYPL. This company has pulled back very dramatically along with many other technology growth stocks and fintech companies. The current PYPL stock trades for $74 per share, and this is because the stock price has fallen by around 64.17% year to date. On the low end, investors think that the company is worth close to around $80 per share, and on the high end, investors believe that this company is worth $255. PayPal Holdings is an American multinational fintech company that basically promotes and oversees online transactions. Analysts from very prestigious institutions have an outperform rating for this company, which is a buy rating, and they have a price prediction for this company over the next 12 months of $95 per share, which is below the stock's current stock price, which means that we could be getting a good deal. Now, this is not to say that any of these companies won't continuously fall, because I think they definitely could due to the current stock market environment, because it's very bearish right now. However, over time, I always think it's really good to buy these companies at a very low price, so it's going to be easier for that stock price to appreciate as time progresses. So please keep that in mind as we head over to our number 1 spot, which is, drumroll please, Amazon.com, ticker symbol AMZN. And to me, this is the best company to buy on this list. The current stock price is $113 per share, while analysts think that the company is worth somewhere around $270, which means clearly it's a buy rating because investors could double their money over the next 12 months. But investors think that the company is worth somewhere between $107 and $232, and their current stock price is between that range of price targets among very negative and positive investors for this particular company. But I would love to hear your thoughts down below. What is your favorite company out of the 10 that we mentioned on this list? Comment if you want more videos like this one. Remember to subscribe if you are new, smash that like button if you haven't already, and I will see you in the next YT video.